Greetings, members, one and all of the Salivation Nation. Gold and silver get whipped by the dollar. Let's explore. There's something else that took a little swipe at the gold and silver as well. We'll talk about that too. But this is typical and is the case. Fascinating indeed. And we're actually looking at palladium too with some news about how it's dropping based off of some good news. But let's take a look at this article from MarketWatch, and we see the bulletin there that Dow has closed up nearly 100 points amid jitters tied to margin call on big fund. We also have some other good news in the Suez Canal that has opened up, and I think that may have played a role too, sort of a backhand. Then we've got a whipping, we've got a swipe, and we have a backhand in terms of the precious metal markets. And you notice what's not in there, and that is price suppression. That's right. All right, very good. So let's take a look at this article here. Gold futures posted their lowest settlement in 3 weeks on Monday, pressured by the strength in the U.S. dollar and Treasury yields. That's right. Treasury yields took a swipe there at gold and silver prices on the back of the U.S. dollar. So it edged up by 0.2% to 92.91 as measured by the ICE U.S. dollar index. A stronger dollar can weigh on dollar-priced assets, making them more expensive for overseas buyers. The 10-year Treasury note was yielding 1.688 from 1.658% at the end of last Friday. Bond prices rise as yields fall. The stronger dollar and rising bond yields were negative elements for the metals market, says Jim Wyckoff, who's a senior analyst at Kitco.com in an afternoon market update. Gold and silver also saw technically related selling pressure from shorter-term futures traders amid still bearish near-term charts. Gold for April delivery lost $20.10 or 1.2% to settle at $1,712.20. We're getting into territory where it could go, as some had predicted, under $1,700 an ounce. It's following a 0.5% weekly slump. Prices based off the most active contracts saw their lowest finish since March 8th. FactSet data show. May silver took a bigger hit. It shed 34 cents or 1.4% to end at $24.77 an ounce after posting a 4.6% decline for the week on Friday. So it's well below that $25 level for silver. You know, it's taken a beating, but it's times like this when we need to hold fast and look for deals. I believe that as these prices continue to decline or to stay stagnant for a while, this is going to test the perseverance of people who are just getting into silver. And this is part of what happens, though. And even as people make promises that, hey, we're gonna squeeze it out and it's gonna skyrocket, it's gonna go to the moon. It's not how it works, folks. You got to be in it for the long haul. You got to understand the fundamentals of what gold and silver are about. Once you have that fundamental understanding, these price dips are not going to sway your buying methods and your approach to the metal. Copper is down as well. It's now at just above $4 a pound. Metal futures face a holiday-shortened week. Commodity and other financial markets will be closed on Good Friday this week. That's right, it is Easter week here. Indeed. Broad declines in the U.S. stock market had prompted some investors to sell the precious metal to generate cash to cover margin calls, some analysts said. Though benchmark U.S. stock indexes saw mixed trading as gold futures settled for the session. Bullion's decline on Monday came amid news that a large investment fund Archegos Capital Management had dumped $30 billion in holdings, including big positions in Viacom, CBS, and Discovery, making some investors concerned about the contagion. The Archegos margin call default is threatening to cause major losses in some investment banks and put contagious pressure onto the equity markets over the weekend, with the result that gold has come off, said Rana O'Connell, head of market analyst, EMEA and Asia regions of StoneX. This is perfectly normal, she said in Monday's newsletter. Almost invariably, when the equities markets come under pressure, gold will come down also. When other markets are suffering and there's a possibility of margin calls or loss of liquidity or simple financial loss, gold is one of the first assets to be sold in order to raise cash and minimize the damage. There's you go. This is why I laugh when people say that cash is worthless or fiat is worthless. It's definitely not true. Now, there's a great member of this community called Fiat Destroyer. But I think his name really does make sense, because you destroy that fiat when you transfer it to gold and silver. But he's not saying that fiat is worthless, so either. And but the thing is that we need this cash to survive for our day-to-day transactions, indeed. And you can see here that just like we saw in other situations and scenarios, when people are holding gold, especially in the paper markets or an ETF, when they want to run the true safety, it is to cash in that environment. Now, for us that hold the metals in the physical form, it's a different story altogether, because the most robust monetary assets that are out there are gold and silver, hands down. But that's the nuance, you see. You have to understand. We utilize that fiat to our advantage, to transfer, to destroy it in a sense, as we move into these precious metal assets. But we use it to our advantage, understanding its value as we make that transaction, and understanding, by the way, with a full understanding that because of what the Federal Reserve is doing and because of our government and both political parties are all about spending that fiat, which means it's more has got to be created out of thin air, because there's no way they can tax us into these programs, these social programs, or these rescue programs. We're definitely on the way to UBI, Universal Basic Income, and that is going to do that much more to further destroy the dollar's value over the course of time. And so that's why we hold the physical, because you're not going to see us run to the safety of cash when there's a simple financial loss or what have you. If we are being fiscally responsible ourselves, and we have the silver and gold as a savings account in times of trouble. Now, there may be times when we may need to sell in order to pay for an emergency expense, something that I'm hopefully won't need to do, because I've got some of that fiat in savings to be able to take care of a repair that I'm going to need to have done. But nonetheless, it is there in case we need it, and that's really the bottom line. Now let's cover a little bit of palladium news, because it led the losses over 5%. I did a story recently about 20% of palladium production could be offline for quite some time because of a mine that showed some flooding. Nornickel on Monday said it completed Phase 2 repairs at two major mines in Siberia. It expects the Oktyabrskyi mine to fully resume production in the first 10 days of May, and Tamrinsky mine to resume output in early June. So this is good news if it is to be believed, that is. It could be negative for palladium over a very concise term, as the last estimate was about 12 weeks to repair to be complete, said Stephen Inez, Chief Market Global Strategist at Axie, in a market update. So in July, platinum contracts settled at $1,184.10 an ounce, up 0.2%. But we can see that all the metals are in the red, save for rhodium, which has not moved after it took a pretty big hit, down now to $25,000. But we can see that gold is definitely down. It's hovering closer to that $1,700 level. Silver is down over 1.5 or at 1.5% now, $24.76 an ounce. And these metals will we may still see more time within the next month where they can stay where they're at or go down even more. But my predictions still stand. I've not made a prediction video for gold yet, but my prediction stands for the metals through the end of the year. Stay tuned. I may do a video on that, although it's kind of late to be making a prediction video for the end of the year. But still have months away before it happens. But my silver prediction was between $30 and $35 an ounce, which is right on target with some other reasonable analysts out there. And I stand by that target. And I'm bullish on gold as well. But my target for gold is actually a little bit more bullish than probably where these prices are right now. But we'll see how it plays out. I'll do a video on that. But I am still bullish on both metals. And that means that I see this as a buying opportunity. Now, I'm making my predictions based off of what I kind of see coming, which no one really knows what's coming in terms of a market of the federal increase. We know debt's going to increase at an alarming rate. That's that goes without saying. But in terms of the economy and the recovery from the coronavirus, that is something that is to be determined at this point as to how much of an effect it will have, the velocity of money and currency and other factors that could come and weigh down, and those triggers that could lead to a catastrophic economic downturn to the likes of 2007, 2008 or worse that could happen. And just because those things happen, by the way, does not mean that gold and silver will just automatically spike, as it didn't do that last time either. It takes a while. There's a lot of other things and factors in play. In the immediacy of something like this, big recession and panic, or what have you, where do people go? It's not gold and silver, believe it or not. It's cash. And I think that's what we would see again, which is why I did a video, a very controversial one, by the way, called The Path to $12 Silver, based off of the experience that I've seen in the marketplace over the course of time. And people take that, and I know I've gotten some comments from people say, well, you can't, every time you say something nice about silver, you end up bashing it at the end. No, I'm always bullish on silver in terms of its purpose and what its role is, which is nothing but positive. Heck, if I was negative on silver, I wouldn't hold a whole bunch of the stuff. I wouldn't keep buying it at some level. If I didn't like silver, I wouldn't have had a round produced with my name on it out of the metal that I supposedly hate. That would be pretty foolish. However, one thing is quite clear. I like to be realistic about silver. And I feel that I do understand the metal in a full picture of the metal, and part of that is being realistic about it. I want to be the best advocate I can for silver and for gold and all precious metals, and part of that means that you don't just fall in line with what everybody else is saying about it, especially if what everybody else is saying about it doesn't have the data behind it to really back up as far as some of the things that they predict that silver is going to go to the moon or what have you because of this factor, that factor. The fact is nobody knows. Nobody knows. But I am keeping an open mind about it, that it could climb up very quickly at a faster pace than I think. And in some ways, I'd be very happy to see that. But if you're a buyer, you want to see these low prices because that gives you an opportunity to buy sans the high premiums. If you can find silver with a lesser premium when the prices go down like this, then you're doing it better. But I don't know. I've shopped around lately. This big drop today, is it reflecting at bullion dealers? My guess is probably not as much. In other words, are you paying 1.5% less at the checkout in your cart when you buy silver from any given bullion dealer? My guess is probably not. You may be paying for an ounce of silver, maybe, I don't know, 0.75% less. These premiums are staying up or maybe even rising because of the great demand for silver right now. But there you go. That's my little thoughts for the day, with gold and silver getting whipped by the dollar, not beat by the dollar, not beat, but just a little whipping. So I hope you enjoyed this video. Let me know your thoughts in the comment section below. We'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.